The Nightly Business Report.
Good evening. Tonight, President Kumara Dissanayake declared in Parliament that private automobile imports would be allowed in Sri Lanka as early as February 2025. Sri Lanka is negotiating with the IMF to raise the income tax threshold to 150,000 rupees per month, according to President Kumara Dissanayake. On the third trading day, the market displayed upward momentum with the ASPI and S&P SL20 both maintaining their gains. The increasing trend showed investor confidence as the indices kept rising. And as investors remained cautious ahead of the Federal Reserve's year-ending policy decision, Wall Street stocks ended lower, with the Dow continuing its losing run for the 9th consecutive session. Good evening and thank you for joining us. I'm Meghala Dandeniya. Sri Lanka will permit private vehicle imports starting February 2025, President Kumara Dissanayake announced in Parliament. The decision follows discussions with the central bank evaluating its potential impact on foreign exchange.
President Kumara Dissanayake reassured the public that Sri Lanka will not face another foreign currency crisis due to car imports. Addressing concerns, he emphasized that the government has carefully estimated the dollar outflows for car imports. He further explained that in order to revitalize the economy, the decision was made to allow imports to resume. Starting on the 14th of December, passenger buses and special purpose vehicles have been permitted for importation, marking the first phase of the policy. The president's remarks aim to alleviate fears surrounding the impact of vehicle imports on the nation's foreign exchange reserves, while underscoring the need for economic recovery. The move is also seen as an effort to stabilize the transportation sector and support economic growth. The government plans to closely monitor the impact of these imports on the foreign exchange situation.
President Kumara Dissanayake announced Sri Lanka's negotiation with the IMF to raise the income tax threshold to 150,000 rupees monthly.
President Kumara Dissanayake outlined significant changes to Sri Lanka's tax system in the parliament, aiming to ease the burden on lower income earners. He announced that wages of up to 150,000 rupees will be fully exempt from tax. The first tax slab, which previously applied to incomes up to 500,000 rupees, will be raised to 1 million rupees, offering further relief. For those earning 200,000 rupees, 71% of their salary will be tax-free, while those earning 250,000 rupees will see 61% of their income freed from tax, and those making 300,000 rupees will have 47% of their salary exempt. Additionally, the salary of a person earning 350,000 rupees per month will see a 25% of their income exempt from taxes. The president emphasized that the revised PAYE tax structure aims to provide larger benefits to lower income earners while reducing benefits for higher income individuals. President Dissanayake also announced a hike in the withholding tax on the banking deposits from 5% to 10%, although lower income earners will have the opportunity to claim exemptions. In a bid to ease the cost of living, value-added tax on milk and yogurt will also be removed.
The Colombo Chamber of Commerce has praised President Kumara Disanayake's recent official visit to India, calling it a pivotal step in strengthening bilateral relations and advancing Sri Lanka's economic and social development. A major highlight of the visit was India's commitment to supporting Sri Lanka in building a digital economy. The Chamber sees this as a valuable opportunity for Sri Lanka to adopt India's successful digital economic model, which has enabled small enterprises to transition to digital platforms. India's experience, despite its large population, offers critical lessons for Sri Lanka's own digital transformation. Both nations have agreed to establish a joint task force to develop the necessary digital public infrastructure. The Colombo Chamber views this agreement as a key outcome essential for Sri Lanka's digital economy aspirations. Central bank data reveals that Sri Lanka experienced foreign outflows from its government securities for the first time in 13 weeks, following a period of nearly $100 million in foreign inflows over the previous 12 consecutive weeks.
Sri Lanka has been implementing deflationary policies and import restrictions following a record high inflation of over 70% in 2022, while interest rates continue to decline. In the week ending December 12th, the country saw an outflow of 2.1 billion rupees from government securities following 12 weeks of steady inflow totaling to 28.8 billion rupees. As of December 12th, the value of government securities held by foreign investors was 66,050 million rupees. Analysts attributed the recent inflows to the country's deflationary policies and the reduction in imports. The new inflows following a strong mandate of Marsik's JVP leader Anurukumar Dissanayake in the parliamentary elections on November 14th. Central bank data indicated that foreign investors held 117.4 billion rupees worth of government securities at the start of 2024. However, Sri Lanka experienced a 66% foreign outflow amounting to 78.1 billion rupees in the first 9 months of this year.
Sri Lanka's manufacturing sector has the potential to become a $10 billion export segment, according to the World Bank's biannual Sri Lanka Development Update. The report highlights significant untapped export potential, particularly in manufacturing, with an estimated $10 billion in annual exports. Following the COVID-19 pandemic and economic crisis, protectionist measures were introduced to stabilize and conserve foreign exchange reserves. The Asia-Pacific Alliance for Disaster Management Sri Lanka hosted a discussion on the World Bank's report featuring distinguished economists, business leaders and industry representatives. The roundtable discussions emphasized the need for fewer regulatory bottlenecks and the re-establishment of development banks to promote industrial and startup investments. These measures are seen as crucial to unlocking Sri Lanka's export potential and fostering economic growth. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market showed encouraging momentum on the third trading day, with the S&P, SL20 and ASPI both holding onto their gains. As the indices continued to rise, the upward trend demonstrated investor confidence. For further insights, we speak with Ranjan Ranathunga from First Capital Holdings.
The Columbos continue to witness its bullish sentiment for another day amid significant volatility seen during the first half of today's session. With that, the all share price index experienced a significant layer of volatility with profit taking visible during the first half of the day. Yet, it bounced back to green during the second half of the day, driven by increased participation from retail and high net worth investors. Banking sector continued to remain as a top pick amongst the investors, largely due to the fact that the sector remains undervalued compared to the stock market. The sector is currently trading at 0.6 times PBV, while the sector is trading at 1.1 times price to book value. Further, amidst the added interest on diversified financials, the diversified financials saw additional interest during the day, driven by the fact that the government is looking to relax the import ban on vehicles. Meanwhile, the top positive contributors for the day were Hat National Bank, Demo, Valuable One, Central Finance Company and Ceylon Tobacco Company, while the top losers for the top negative contributors for the day were Lion Brewery, Ceylon Beverage Holdings, Commercial Bank, Ekans Pens and Haycarb. Meanwhile, Demo was the top gainer for the day with a gain of 24%, while Satosa Motors, Lakshapana Batteries and United Motors were also top gainers for the day. Meanwhile, Lion Brewery, SMB Finance Non-Voting, Ceylon Beverage Holdings and Tea Smallholder Factories were the top losers for the day. Thank you.
The secondary bond market saw continued yield drops yesterday, driven by increased trading and strong demand. This followed a filing on the Singapore Stock Exchange about Sri Lanka's debt exchange program, which achieved a 97.86% participation rate. For further insights, we speak with Zahima Jehan from First Capital Holdings.
The CBSL conducted the weekly bill auction today, raising 185 billion rupees. So at the auction, the total offered amount was fully accepted from each maturity, and weighted average yield rates saw a decline across the board for the second consecutive week. So the 3-month bill saw a 3 basis points decline, closing at a weighted average yield rate of 8.66%. And the 6-month bill declined by 7 basis points, closing at 8.81%, while attracting a larger reception. Also, the 1-year bill slumped by 5 basis points, closing at 9.02%. For the week ending 20th December, there are maturities worth 192.9 billion rupees to be settled by CBSL, with 185 billion rupees being accepted at today's auction. It is likely to witness an increased liquidity in the market over the week. So since last week's auction, the secondary market has seen consistent buying appetite, indicating a positive investor sentiment. With this, the yield curve saw a downtick across the mid to long end of the yield curve.
Gold prices held steady in Asian trade today following a decline in the previous session as the Federal Reserve began its December policy meeting. Spot gold remained largely unchanged at $2,646.10 an ounce, while February gold futures dipped slightly to $2,660.72 an ounce. Markets continue to focus on the US interest rate outlook, with expectations that the Fed will implement a gradual rate cut in 2025 following a decision at the conclusion of its two-day meeting today. Investors are closely watching for any indications of further policy adjustments in response to economic conditions. The upcoming rate cuts could have a significant impact on global financial markets, including gold. Oil prices showed little movement in Asian trade today as traders refrained from making big bets, awaiting further cues on interest rates. Brent oil futures for February settled at $73.20 a barrel, while West Texas Intermediate crude futures remained steady at $69.66 a barrel. Crude prices have remained largely range-bound this week after gains last week, driven by expectations of additional US sanctions on Russian oil supplies. However, concerns over weakening demand in China and fears of a supply glut in the coming year dampened momentum. Oil markets were further pressured by a stronger dollar, with traders awaiting the conclusion of the Federal Reserve meeting today. The Sri Lankan rupee has further depreciated against the US dollar today compared to yesterday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have increased. Let's now take a look at how the Sri Lankan rupee is performing against other global currencies. A short break now. This is the Nightly Business Report. Welcome back. Toyota Lanka has successfully imported and is ready to deliver its first batch of brand new Toyota vehicles, marking a significant milestone aimed at boosting Sri Lanka's tourism sector.
Toyota Lanka has successfully completed an initiative within just 4 months following government approval, marking a significant step in supporting the growth of Sri Lanka's tourism industry. The newly introduced vehicles are designed to offer world-class, dependable transportation solutions for tourism operators, improving the sector's service quality and reliability. With a strong legacy of providing reliable vehicles and trusted after-sales services, Toyota Lanka continues to empower key economic sectors. The company views this milestone as the beginning of a promising journey, with plans to import more vehicles to meet the growing demands of the tourism industry. Toyota Lanka expressed pride in its role in transforming the tourism sector, contributing to both expansion and modernization. The initiative aligns with Toyota Lanka's long-term commitment to supporting Sri Lanka's economic development. Looking ahead, the company remains dedicated to fostering growth, innovation, and sustainability within the tourism industry.
Sampath Bank announced its successful integration with the payment gateway Cybersource, strengthening its leadership in digital banking. This partnership aims to provide businesses with seamless payment solutions, fostering growth and success. By integrating with CyberSource, a Visa solution, Sampath Bank enhances secure and user-friendly transactions while offering advanced fraud management tools. Merchants will benefit from detailed reporting capabilities and adaptable payment processes tailored to their needs. CyberSource is a leading payment gateway known for delivering fast, convenient and secure solutions for both small and large e-commerce businesses. SEAT Kalani Holdings has launched its Europe range of high-performance radial tyres in Sri Lanka, offering automobile enthusiasts access to global standard tyres for luxury cars and SUVs.
SEAT has launched its Europe range of high-performance tyres consisting of 19 sizes across 6 patterns, specifically designed for rim sizes of 16 to 18 inches. These tyres, classified as high-performance and ultra-high-performance, meet European standards and were developed at Tested and SEAT's R&D centre in Frankfurt, Germany. The range includes tyres for a variety of vehicles from Secura Drive 195/55 R16, suitable for cars like the Toyota Premio and Honda Civic, to the larger Cross Drive 80/265/60 R18, designed for SUVs like the Toyota Land Cruiser and Mitsubishi Motero. SEAT Europe also offers tyres for luxury vehicles such as the BMW X1, Mercedes-Benz C and E-Class, Audi A3 and A4, and the Peugeot 3008. The tyre range is tailored for performance-driven innovation with sub-brands including Secura Drive, Sport Drive and Cross Drive 80, all focused on delivering exceptional quality and durability. The Sports Drive series is engineered for precise steering and superior braking, even at speeds of up to 250 km per hour. SEAT's Europe range promises to meet the stringent quality requirements of European vehicle manufacturers, enhancing performance of a wide range of vehicles.
The Association of Chartered Certified Accountants Sri Lanka recently presented its proposals for the 2025 National Budget to Dr. Harshana Surya Peruma, Deputy Minister of Finance at the ACCA office. The proposals focus on the 10 key priorities addressing both immediate economic challenges and long-term structural reforms. These include establishing a budget monitoring unit, implementing tax reforms and creating a transparent procurement process for government projects. The ACCA also emphasised accelerating digital transformation, boosting investments in research and development, and improving education quality. Ceylon Worldwide, established in 2010 as a producer of t-shirts, hats and bags, marketed its global expansion by participating in the International Apparel and Textile Fair 2024 in Dubai.
The company has expanded its offerings to include a diverse range of promotional merchandise such as branded t-shirts, caps and tote bags tailored for any marketing campaign of promotional drive. The high-quality printed materials are designed to support businesses in boosting brand visibility and customer engagement. With a portfolio that includes millions of products for over 400 corporate clients worldwide, and the company has established itself as a trusted provider of promotional solutions. With a portfolio that includes millions of products for over 400 corporate clients worldwide, the company has established itself as a trusted provider for promotional solutions. To celebrate its 15th anniversary, the company unveiled a bold new logo signaling a fresh chapter in its growth. Along with its rebranding, the company has also forged new global connections, further extended its reach in international markets. The milestone marks the company's continued commitment to delivering innovative products and services. Moving forward, it aims to strengthen its position as a leader in the promotional merchandise industry.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks gained today following a report indicating that China plans to boost fiscal spending in the coming year through caution ahead of the Federal Reserve's rate decision limited further gains. China's Shanghai Shenzhen CSI 300 and Shanghai Composite indexes rose by 0.6% and 0.7% respectively, while Hong Kong's Hang Seng index climbed 0.9%. Japan's Nikkei 225 index dropped 0.3%, while the Topix index saw a 0.3% increase as investors awaited the Bank of Japan meeting this week, with analysts divided on whether will raise or hold rates. Australia's ASX 200 rose 0.2% amid optimism about China, while Singapore's Straits Times Index edged down 0.3%. Stocks on Wall Street ended lower, with the Dow extending its losing streak for the 9th straight session, its longest since February 1978, as investors exercised caution ahead of the Federal Reserve's final policy announcement of the year.
U.S. stocks ended lower on Tuesday, with the Dow dropping for a 9th straight session as investors showed caution ahead of the Federal Reserve's last policy meeting of the year. The Dow shed 0.6%, the S&P 500 lost 0.4%, and the Nasdaq dipped about 0.3%. Markets are pricing in a quarter-point interest rate cut from the central bank at the conclusion of its two-day policy meeting on Wednesday. Investors will also be looking for any signs from Chair Jerome Powell on how aggressive the Fed will be in cutting rates in 2025. Data on Tuesday showed U.S. retail sales increased more than expected in November, consistent with the economy's strong underlying momentum. Stocks on the move Tuesday included Tesla, up more than 3.5% after at least two brokerages hiked their price targets on the stock this week. Pfizer jumped more than 4.5%, after the drug maker forecast 2025 profit roughly in line with Wall Street expectations. And it was another record day for Bitcoin, which briefly crossed $108,000 for the first time.
Honda and Nissan are in talks to deepen ties, including a possible merger, the clearest sign yet of how Japan's once seemingly unbeatable auto industry is being reshaped by challenges from Tesla and Chinese rivals.
Nissan and Honda are planning an alliance. Source says the two firms are in talks to establish a joint holding company. That would allow them to share more resources as competition heats up in the auto industry. Nissan shares surged on the news, jumping more than 20% in early trade on Wednesday. Honda didn't fare so well, however, sliding around 3%. The talks were first reported by the Nikkei newspaper. An alliance would allow two of Japan's biggest automakers to cooperate over technology as the shift to electric vehicles reshapes the industry. It wasn't immediately clear whether a full union was the ultimate plan, though the Nikkei reports that merger talks were underway. On Tuesday, the two firms released identical statements saying that no merger had been announced, but they admitted to exploring various possibilities for future collaboration. Over the past year, an EV price war launched by Tesla and Chinese rival BYD has made it harder for other firms to make money on the zero-emission vehicles. The industry has also faced stalling demand for electric cars in the US and Europe, and Japan's big exporters all now face the looming prospect of sweeping tariffs under a new Trump administration. Any deal would be the industry's biggest since the $52 billion merger of Fiat Chrysler and PSA in 2021. Honda and Nissan have already deepened ties, agreeing earlier to work together on batteries and other technology. Nissan may be more in need of a helping hand, after saying last month that half-year earnings were down over 90%. Its market capitalization is about $10 billion after Wednesday's surge, or less than a quarter of Honda's.
And that is all from us on the Nightly Business Report for today. We will see you again tomorrow with the latest business updates around the globe. Thank you for watching. I'm Mikla Dandinian.